Hi and welcome to InsureMo by eBotech. Our team are delighted to contribute our many years of learnings and experience across business, technology and change management to the global insurance market. Let's talk about the insurance documents. Insurance documents includes insurance policies, insurance contracts, payment invoices, certificates, renewal notice, schedules, etc. These documents are necessary to evidence a contract between insurer and insured typically. Also can be used in various administration processing of insurance organizations. We will see each document type in detail now. Insurance policy. An insurance policy is a legal contract that is agreed upon by two or more parties. The insurance contract or agreement is a contract whereby the insurer promises to indemnify the insured, known as the policyholder, if certain defined events occur an insurer is legally required to pay. Parties involved in insurance contract are insurer and insured. Insurer is a person or company that insures someone or something or a company that provides insurance. Insured is a person, group of people, or organization that is covered in a particular agreement. Insurance contracts are designed to meet specific needs and thus have many features as follows. Insurable interest: take consideration of value that is insured under a policy. A person with insurable interest will suffer a genuine hardship if a loss should occur to the person or property they've insured. For instance, people have an insurable interest in their own lives and property, but generally do not have insurable interest in their neighbor's life or property. Legal requirement: an insurance contract must meet 4 conditions in order to be legally valid. It must be for a legal purpose, the parties must have a legal capacity to contract, there must be evidence of a meeting of minds between the insurer and the insured, and there must be a payment or consideration. Utmost good faith: each party, the policyholder, the insurer and beneficiary, a person who is entitled to the benefits of insurance policy, must act with fairness and honesty in their dealing with each other. An example of this would be insured policyholders' obligation to make full disclosure of all relevant facts which may enhance the level of risk, when taking out the insurance in line with their duty of disclosure. An example for an insurer would be to respond to a claim made under a policy in a timely fashion. Consideration: this is the premium or the future premiums that you have paid to your insurance company. For insurers, consideration also refers to the money paid out to you when you file an insurance claim. This means that each party to the contract must provide some value to the relationship. Offer and acceptance: to be legally enforceable, a contract must be made with a definite, unqualified proposal, offer, by one party and the acceptance of its exact terms by the other. Parts of insurance policy or contract which describe the contract information. Heading: the header for each policy includes the policy name, policy number, responsible office name, and the applies to section. Policy name: required. The policy title is the primary means of identifying, locating, and referring to a policy. Preamble: it simply says that the insurers will, in return for the premium, pay the losses or claims made under the policy. Most policies have a distinct preamble, although some modern policies do not. Sometimes the preamble and the insuring clause are merged into one clause. Condition: these are specific provisions, rules of conduct, duties, and obligations that the insured must comply with in order for coverage to incept or must remain in compliance to keep coverage in effect. It explains duties and responsibilities of the insured and the insurer. Exclusion: an exclusion is a policy provision that eliminates coverage for some type of risk. Exclusions narrow the scope of coverage provided by the insuring agreement. Insurers utilize exclusions to carve away coverage for risks they are unwilling to insure. Deductible: in an insurance policy, the deductible is the amount paid out of pocket by the policyholder before an insurance provider will pay any expenses. This is also called as excess. There can be compulsory excess or voluntary excess in a policy. You can often negotiate a cheaper premium if you accept a higher excess. For example, you have compulsory excess defined as 1,000 rupees. You accidentally bump into another car, and your car suffers a dent for which the repair amount sums up to 9,000 rupees. In such a scenario, you will only get 8,000 rupees from your insurance company, and 1,000 rupees will have to be borne by you. Grace period. An insurance grace period is a defined amount of time after the premium is due in which a policyholder can make a premium payment without coverage lapsing. The insurance grace period can vary depending on the insurer and policy type. Free look period. The free look period is a required period of time, typically 10 days or more, in which a new non-life and life insurance policy owner can terminate the policy without penalties, such as surrender charges. The free look period is for the benefit of a policyholder. Policy wording. Policy wording is the terms and conditions and definitions of insurance coverage as they are written down in the insurance policy. Any ambiguity in an insurer's proposal form or policy wording will be construed against the insurer. Authorized signatory. An authorized signatory is defined as a director of the issuer or another person who has been authorized to sign documents and has notified the trustee that they've been given the power to do so. A representative or officer is normally given the power to sign the organization to an agreement that's binding. Let's see various forms of insurance document. A proposal form is the form completed by the policyholder when applying for insurance. You will need to fill in information about the risk you are insuring, for example the rebuild cost of your house or type of car you own. Proposal form is used in order to analyze the risk exposure of a person, asset or a company. Its structure must help insurance companies to realize a better evaluation of the risks. Prospectus is a marketing effort aimed at acquiring customers or clients, prospects, for one's product or service. There are many ways to prospect and various means of evaluating its success or failure. Risk inspection report is a report generated by an insurance company regarding the details of a specific risk. Inspection reports are designed to examine the risk from a moral, physical, and financial perspective. A medical practitioner examines a patient for any possible medical signs or symptoms of a medical condition. It generally consists of a series of questions about the patient's medical history followed by an examination based on the reported symptoms. This report helps insurers to calculate the consideration as well as to make decision of acceptance or rejection. Special or underwriting questionnaire is a set of questions to evaluate the risk insuring a home, car, individual, etc. It is intended to collect the specific information related to risk to understand the nature and behavior of it for consideration. They decide how much coverage the client should receive and whether even to accept the risk and insure them. Deposit/premium receipt, a receipt issued to the policyholder by the insurer or the insurer's agent which proves that payment has been received. A formal document providing evidence that an insurance policy has been issued by an insurer containing the details of the type of insurance cover, its value, insurance company, named insured, policy number, any exclusion or excess limits, the premium, payment mode, payment schedule and the period of the insurance cover, how long it is in force. An insurance endorsement is an amendment to an existing insurance contract which changes the terms or scope of the original policy. Endorsements may also be referred to as riders. An insurance endorsement may be used to add, delete, exclude or otherwise alter coverage. Renewal Notice, an official document that tells you that an agreement will soon end, and an arrangement needs to be made if you want to continue it for an extra period of time. Your new insurance premium is shown on the enclosed renewal notice. eBaltech InsureMo contains over 3,000 out-of-the-box insurance product templates within its platform. Covering over 40 lines of business and life, group, general and health, our library holds many elements introduced in this video. To find out how InsureMo can digitize your insurance products and accelerate your time to market from months to days, whether insurer, distributor or partner, contact us at insuremo.com and together let's make insurance easy.